Hi, Dan Polimino here from Keller Williams Realty Maui, Big Island, and the Hawaii team. Well, today I am doing part 3 in our series about short-term vacation rentals. And if you missed parts 1 and 2, they're right here on our YouTube channel. Part 1 talks about what homes or condos qualify for a short-term vacation rental. Part 2 talks about how do you manage one of these from afar. And today, in part 3, we're going to be talking about the ROI, or return on investment. How much can you make? Now, I'm sorry to be the bearer of bad news, and I may have to burst your bubble here, but the reality is that typically investment properties in Hawaii do not cash flow. And so I'll give you an example. Let's say you were buying a $600,000 condo in a vacation zone along the resorts. And let's just say that it cost you $60,000 a year to own that condo. And I'm talking about getting financing. I'm not talking about paying cash. So you've got a mortgage, you've got HOA dues, you've got taxes, you've got insurance, and you've got the property maintenance that you're gonna have to do along with that. So let's add all of those up and say it costs you $60,000 a year to own that condo. You are gonna end up recouping or netting, after you short-term vacation rental it, about 50%. You're gonna bring back about $30,000. And you're like, well, Dan, that doesn't sound good. I mean, come on, everybody does this. People have lots of short-term vacation rentals. They have to be making money at it. Most of them are not. Most of them are taking in whatever they can to help offset the cost. A lot of people say, hey, Dan, I'm okay with getting a short-term vacation rental property there. I'm there. I want it so I can enjoy it 3 or 4 times a year. And if I rent it out and make a little money back, I'm fine. Well, that's going to be the case. And now you're saying, well, what's the reason for that? Like, how come it doesn't cash flow? And the answer is, number one, the price that you have to pay for property is so high here in Hawaii that you can't charge enough of a nightly rate to make it up. That's number one. Number two, HOA dues in most of these condo and resort areas are very, very high. So to maintain the landscaping and everything around it, the exterior of the building, it could run at minimum $1,000 a month in HOA dues and as high as $3,000 a month in HOA dues. And in many cases, it's almost the same as your mortgage payment. So that can be a killer, and that's one of the reasons why it doesn't cash flow. The next reason is most of the time you're hiring a property management company to do the sales and marketing, book the people and manage all of that, and the property management. Those sales and marketing companies are going to charge between 15 and 30%. All right? So that's going to take a big chunk of your profit. Then there's taxes. There's all kinds of different taxes. There's conveyance tax. There's transient accommodation tax. These are taxes that have to be paid to the state on every rental. Cuts into your profit. And then you can't book it every single night, right? You want to use it once in a while. And so here's what banks do. When banks are trying to calculate how much income you're going to derive off an investment property, they figure it at about a 70% occupancy rate. And that's probably a safe number, knowing that 30% of the time you're not going to book it, or you may be wanting to use it. So 70% of the time you're going to have rental income. Take everything that I just put in there and say you're going to net about half of what it cost you. Now, could you net more? Sure, you could. It may be a very exclusive property. You might be able to charge a very high rate. You may be in a program like a vacation club with Inspirato, or you may manage it entirely yourself. You may be doing the bookings on VRBO and Airbnb, in which case your amount of profit would be higher. And last but not least, given the pandemic, there are a lot of people wanting to rent your place, and they're willing to pay a premium per night. So maybe that 50% rule in current post-COVID era is now 60% or 65% you're netting back of your total cost. All right? I hope that helps you. If you want more information about how much cash flow or how much you can make on a short-term vacation rental, contact us here at the Hawaii team. And if you're thinking about buying, selling, or investing in real estate, give us a call at 808-913-0899, 808-913-0899, or TheHawaiiTeam.com. Aloha, everyone.